The only one New Year's resolution that every investor should make is to trade cautiously until inflation and recession fear are on the front pages. Renewed bearish pressure is quite likely for benchmark Nifty. The negative catalyst, US private sector employment rises at a stronger pace than expected by 235K in December versus 105K expected. This data gives a boost to the US dollar, which spiked to 104.95 levels. All eyes will now be on the inflation data from the Eurozone and the Friday's December jobs report from the US. Our call of the day suggests volatility is likely to be the hallmark as long as recession and inflation fears are on the front pages. We say so because Federal Reserve Chairman Powell remains unimpressed with the reduction of the rate of inflation, down to 7.1% in November, from 9.1% June. The consensus is a desire of the Fed to increase their forecast for the Fed funds rate to 5% in 2023. Please note, the ongoing 500 basis points of rate hikes is in just 1 year as against 425 bps of rate hikes over the course of 3 years, which led to the Great Recession. Long story short, caution is the buzzword even for permabulls. Global cues are negative. In yesterday's trade, FII sold shares worth Rs 1,450 crores. DII's 2 sold shares worth Rs 194 crores. Fando options data suggests Nifty's range of 17,500 to 18,500 zone. India VIX is hovering at 14.98 levels. Nifty PCR is at 1.31. Bank Nifty PCR is at 1.06. Nifty's outlook for the day, volatile and choppy. Market breadth for the day likely to be negative. Sentiment for the day likely to be precarious. Nifty's technicals are suggesting weakening momentum. Nifty CMP 17992. Support seen at 17771 to 17,461. Resistance is at 18,127 to 18,267. Range is from 17750 to 18150. Bias is negative. Bank Nifty CMP 42609. Support seen at 42,291 to 41,567. Resistance is at 43,100 to 43,757. Range is from 41750 to 42,900. Bias is negative. In yesterday's trade, Nifty bears showed no mercy as investors assessed a warning from the hawkish Federal Reserve minutes that it would